So what is private credit? It's actually very simple. It's just making a loan. Loans have been around since the beginning of money. And so this is really no different than just making a loan like you would to your neighbor or a business down the street. The difference is we're doing this at a very large scale across hundreds of companies that are looking for credit, and they're not able to get it from regular banks. And part of this is a function of what happened after the great financial crisis, when the regulators came into the banks and said, hey, you need to reserve more capital for your balance sheet. You have to stop making so many loans. And so that created a large gap in the marketplace where companies couldn't find debt as easily as they could before. And private lenders stepped in to make attractive loans at high interest rates. And these loans tend to be lower leverage. So you're not talking about a 80%, 90% leverage loan like you would your house, a mortgage, where you're putting down a little bit of equity, that 20%, and then you're taking out a huge loan. Here with businesses, the loan to value is typically much lower, often lower than 50% debt to equity. And so that's represented over here in this capital stack where you see the majority is equity. And then you have senior secured debt here at the top. And this is what private credit focuses on. Typically senior secured loans that are the first to get paid off if there's a problem. The lender can step in, they can sell the property, they can sell the assets of the business to recoup their loan. Everybody understands what a loan is. So private credit is just a lot of loans made to great businesses, made to great real estate, where we're getting a interest payment in exchange for putting out that capital so the businesses can use it. And just like a mortgage, those payments come in monthly, which is a great way to get current income. And in my view, a much better use of your capital than putting into fixed rate bonds at much lower interest payments. The interest payments here right now are in the high single digits. So we're getting high monthly returns with debt risk, which is very unusual, which is why we're so excited to be making these investments right now.